Hey, everybody, it's Pete Carmasino here at Chaikin Analytics. Thanks for joining me here on the halftime show at StockCharts TV. We do this every Monday. And here we are again, Monday, April 25th, 2022. Just looking at the markets here, we are off and actually heading into the worst levels of the day on the S&P anyway. And ironically, we're seeing rates come down, oil's coming down, everything's coming down. So really what I'm seeing right now is bonds trading higher, obviously as rates move lower, bond prices move higher. When you hear bond prices are up or bonds are up, you should automatically know that rates are down. They're inversely related. So today we're going to look at a few different things. We're going to look at some sectors. We're also going to look at some of the most actives here. A really cool feature on StockCharts is they have some different ways to look at some of the groups out there. You have candle glance, and I can go to the beginning or the opening page and then move to my dashboard. And so we'll just look at, a few different things here and try to kind of correlate what we're seeing and what's the activity that's happening right now today, and to look at some of the sectors that are performing that we have that are rated higher, and see if there's any correlation as to what is being the most actively traded here in today's market as well. So let's see where that takes us, and let's take a look at the charts. All right, everybody, here I am back at the StockCharts main page. When you log in, you come to this page, got a lot going on here. It's actually really well laid out. I really like it. And over here, I just went to market movers. I'm picking the S&P 400. I'm just clicking the most active, and I used candle glance. You just jump down there, hit candle glance. You can change, it to 6 months, whatever you want to do, kind of redoes it there. So I like 6 months. It's kind of interesting. And we're just going to take a look at what's going on here. So what do we see here? Cleveland-Cliff, U.S. Steel, some retail, another metals company. Not exactly sure what that is, but it might be a shipping company. Not sure. Looks like another oil and gas, airline, bank, retail, and Sunrun. So we'll take a look at what's going on here. So I don't know if I see anything specific here yet, but let's just start taking a look at a few different things. So if I go to the ACP platform and I type in, I can see some of the symbols up there. So I can type in CLF. Let's go take a look at that. Pull up rating. We get a very bullish rating. So materials and steel, Cleveland-Cliff. I don't really have, I can put a candle on here if I wanted to real quick. No big deal. And definitely one of the active names, down pretty heavy today. Pretty heavy. So let's take a look at what we're seeing here. And I'm going to go back to the sectors after I look at this one particular name. So this one just caught my eye because I've been kind of eyeing it up. Why? Because it's oversold. I got a bullish rating. I got an incredible relative strength, good money flow. But look what's happening here. You get to the top of that range, it rolls over and sells off, even though I've got strong stock and a strong industry. Now, we talk about this all the time. Earnings. So earnings came out, they beat. But what's happening is we're getting a broad-based commodity sell-off, right? Here's coal. Look at all the coal names down pretty big. If I typed in USO for oil, I'm going to see that off. I see the oil on a different chart down 6.5%. This particular ETF down 5.5%, not neck and neck here, but we are getting a broad-based sell-off. Now, we're also getting a sell-off in the markets. You can see across the top of the board here, 1.5%, 1.6% on the SPY, about 1.5% on the Dow. Q's, oddly enough, holding up pretty well today, but small caps looking to be in sync with the SPY here. So again, what I'm trying to kind of decipher here is, am I seeing something? The first thing I see is Cleveland-Cliffs and U.S. Steel. Let's go to X. Okay, two steel names. This one's down 6.5%. Very similar chart. It got extended. There's no doubt about this, but it's getting oversold here, even though strong stock and a strong industry. Be careful. I'm showing earnings reporting here on April 28th. That's not verified. That's basically from our data provider, but sometimes there's dates are misrepresented. So just make sure you check that. But at the same time, we're in earnings season. So anything's possible. Anything's possible in earnings season. I don't want to fight that tape if I'm not exactly sure what's happening. But if I already have earnings behind me and there's no big names potentially in that group that I'm looking at that are going to continue to report, like banks. You got banks on one day. You might have, JP Morgan on Tuesday and Goldman Sachs on Thursday. You want to wait. You want to see what the whole trend of the industry is. And so this is no different here. No different here. Sometimes they report collectively in a group. It just kind of works out that way. And sometimes they're sporadic. They could be a week or two apart. You got to be careful about that. So earnings season is, some people call it silly season. I call it fighting the invisible man season. I wouldn't want to get in the rink, in the ring with Mike Tyson, and I certainly wouldn't want to get into the ring with the invisible man, no matter who he is, because I can't see him, and I don't know what's going to happen in earnings. So I said I was going to go and look at their ETF comparison. And what I meant by that was we rate ETFs, and look at I'm looking at here. I'm looking at some, I would say, on a very relative basis. You see some of these names are defensive, right? The two that pop out are utilities and staples. Energy has just been on a tear. Is it defensive? No, but it's cyclical, and obviously it's part of the environment that we find ourselves in today, right? Shortage of supply, things of that nature. Obviously, energy runs. Now, what's happening is energy is reacting on the downside because why? Well, more supply is being added to the system. And when that happens, you're going to get a sell-off in any commodity that's based off of that. Now, the flip side of this could be China and obviously demand destruction. So we're fighting a lot of things that we don't necessarily know for sure. But at the same time, we want to keep in mind what's working here. So utilities, staples, and real estate really are the areas of the market that could be considered defensive. Healthcare is really the third one. Typically, it's healthcare, utilities, and staples. But sometimes you'll see real estate creep up into there. And why? Well, real estate does well in inflationary times. If you look at, the last week, month, 3 months or so, it's done okay. Year to date, not so great, but recently it's done well. So do I see anything in here that's giving me any kind of, interesting read? Well, I see airlines kind of here. I see banks. I see retail. But let's look at this one more name here, Alcoa. Again, another copper name or metals name. It's, they do multiple things, but more aluminum than anything. But if you go in and look at really what Alcoa does, they're more aluminum, obviously, but they've got a lot of different segments in here as well. But look at this now, breaking down. I don't like this trend at all. It's a weak trend, obviously, but it's not breaking down on a relative strength basis, meaning it's not red. It's been pretty green for a long time. Really, this came from the single digits in the mid year of 2020. So it's had a tear. I mean, this thing hit close to 100, if not traded at 198, looks like the high. But you've got to be aware of this. And so there's something significantly happening this particular week in metals, but not only just metals, but also in commodities in general. So when I look here, I see a lot of different things here being affected. And if I look at retail, like Macy's, we looked at Lululemon last week, and that had a kind of a rip-roaring, very, very whipsaw trade. But look at Macy's sideways, just kind of meandering across the board here, not really giving you a lot of good look at all. If I go to our chart here on ACP, am I seeing anything different? Not really. I mean, not really. This is more, on a monthly basis. But if I zoom in a little bit and look at daily, I see that same range-bound trade. I see the moving averages converging a little bit. I got CPI down here. That was for a different chart, so I can just click on that and delete that because it's kind of confusing. But you see, I get a neutral plus on it. Kind of all systems are go here except for technicals, and you can clearly see that. So we're getting a mixed bag here. So let's go back. I'm going to go back to the front page here. Click on market movers again. And then let's go back to the S&P and let's see what we're seeing on the upside. Anything interesting? Some consumer names in there like Yeti and things of that nature. Some of these names I don't know off the top of my head. I see AutoNation. Let's go look at that one. Now, that's interesting to me. Car dealers. AutoNation is a series of car dealers across the nation. It's obviously a huge stock. $6.5 billion market cap, but look at the revenue, 27 billion in revenue. Now it's up 5% today. Well, reported earnings, okay, beat estimates, but relative strength is not there, right? It is neutral plus, but it's not above the long-term trend. But I have a weak stock and a weak industry, and that's not really what we'd like to be involved in when we're looking for names to sort of allocate capital to. Again, this is a tough market in general right now, but we're always looking to create watch lists, and we're always looking for new ideas. And so when they kind of present themselves in different formats, you want to kind of take a look at that. I like to look at that 6-month chart. Yeah. And I don't really see anything else standing out to me except for SABR. Let's take a look at that. SABR. Pull it up on our charts. I'll pull it up on ACP. Okay. Interesting. So IT services, I don't have a good fundamentally rated stock. It's pretty much inexpensive, but travel solutions and hospitality solutions. So these particular folks really serve the obviously hotel and any kind of travel related names, but I do have a weak industry for IT services. But you got to look a little bit deeper. What industry are they serving? They're serving the travel industry. So this one's interesting. I'm not liking the fundamentals being so weak, but earnings in general have struggled, and you're not getting good ratings there. And if I go back and look at the ACP chart, I do see a nice trend change here on the 50 crossing over the 200 or 55 EMA in this case, in this particular chart, but nothing really great. Let's take a look at something else. I don't really have a dividend. It's pretty much really a small to mid cap name, and but one to watch. I'd add this to a watch list. Again, I'm not really looking at anything right now to be exposed to in this market, in some of the drawdowns that we're getting here, because it's just a dangerous market to trade right now. But let's look at Yelp. It's interesting too, right? I guess Yelp could get a little bit more activity. Interactive media services, no downtrend, relative strength breakdown. I was oversold, but I didn't quite get back to my overbought. I got a weak stock and a weak industry, and I got earnings on in about a week or so next Thursday. Not looking great. Not liking it at all. Let's look what else we have here. Anything else looking interesting on these charts? NUVA, don't know. I think that sounds like a biotech, or is it NuVasive? Let me see. NUVA. Let's look real quick. Yeah, NuVasive. Healthcare equipment. Interesting trend change. Not liking the fact that it's a weak industry. Definitely not liking the fact that the power gauge is not in sync. And as a matter of fact, just turned bearish. And I do have earnings coming up next week. So I got a bearish name. Now, again, sometimes the market knows more than the analysts know, and some of the fundamentals and even our rating. But we can't discount the fact that it's been neutral and just turned bearish. But I also see the technicals shaping up here too. So I would say what we're getting here is what we're getting every day in the market, is a mixed bag, and really nothing that's definitive as any kind of particular setup that I'm seeing today. Okay, folks, there you have it. I went through a couple different ways to look at what we're seeing. You saw our sector rank on the ETF comparison page. You saw some of the active names in the S&P400. I picked sort of an obscure index there. I just wanted to kind of see if there was anything standing out. I saw a couple metals and mining names that weren't looking great. Obviously, you were seeing a big sell-off in commodities. But again, always searching for ideas and trying to either build watch lists or kind of dissect exactly what the market is trying to tell us, or interpret really what the market is trying to tell us here. And again, just markets really on their worst levels of the day. We're seeing a sell-off. Be careful out there. Use your stops. Risk management's key in this market. So we keep trying to bring this, some ideas to you every week. But again, take it, for what it's worth. The market environment right now is very choppy and very volatile. Be careful. We'll see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.